Welcome back, everyone, to another one-on-one with Jerry Hall. Today's guest is Mr. Brent Johnson. That's right, the milkshake theory is in the house. We're going to discuss the US dollar, obviously, as well as capital markets, but there is going to be a heavy dose of cryptocurrency. Brent's thoughts, his experience, etc. He's got some interesting stories in that regard, and I hope that you enjoy them. This was an incredible conversation, one that uplifted me, and I hope will be educational and uplifting for you. So let's get right to it, right after this. So Brent, thank you so much for taking the time to join me today. How's the weather there in San Francisco?
You know, it's actually cold and foggy today. You know, July in San Francisco is kind of one of our coldest months. So everybody else gets the summer and we have to wait till September. So that's the way it goes.
Isn't that amazing? You can just pop over the Golden Gate Bridge, get into Marin County, and the sun is shining and it's 85 degrees. Oh, it's beautiful.
Yeah.
Right on. Hey, I wanted to start this chat off today with, from your perspective, what you see this integration of this, we'll call it the cryptocurrency digital asset world in with capital markets, and maybe personally, like how is it affecting you in the way that you go about doing what you do at Santiago Capital?
Yeah, well, I mean, there's certainly this, you know, this evolution of or this new frontier of finance, and a lot of it, you know, revolves around digital currencies and this digital ledger technology, and the blockchain and all this kind of stuff. And my view, I followed it for a long time. I kind of have this love-hate relationship with Bitcoin because I read the white paper in January of 2010, and it was trading at 25 cents. And I remember thinking at the time I should just buy $5,000 worth and forget about it. And it was one of the few times in my life I was actually practical, and I did not do that. You know, hindsight's 100 or 2020. But I've followed Bitcoin for a long time, and then I honestly don't get that into all the altcoins. But I just love the space because, I mean, at the end of the day, I'm a capitalist, and I believe that the capitalist system is the best system for good in the history of man. Now, there's some things wrong with it, and the bastardization of capitalism has led to some problems in the last 20 years, and now capitalism itself is under fire. But I think just pure capitalism is the greatest system that there is. And I see this digital ledger technology and Bitcoin and digital assets as the kind of the wild, wild west. It's one of the few areas that is still fairly free. Now, there's more regulations that are coming in every day, and it's becoming more, I guess, regulated, and there's more traditional entities are getting involved. And so with that, they bring, new laws and new regulations, but it's still, compared to most other areas, it's still, it's being created as we talk. So I just find the whole thing fascinating, and it kind of blends in with macroeconomics and currencies and everything. So, it's pretty interesting for me.
And it really is interesting. One of the things I've gleaned from watching a tremendous amount of the content that you've been a part of is that you really do have a grip on the global currency stage or asset class, or whatever you want to call that particular segment of the markets. And I enjoyed watching your interaction with Lynn Arden talking about the dollar, and everybody knows you're famous for your dollar milkshake theory. And it was one, I will tell you, it was that particular analogy that really helped me understand the gravitational flow of funds to value. And sometimes those values are perceived and they're very evident, and sometimes they're not. And it was through your explanation of how you coined that phrase that I started to glean the sheer magnitude that is the US dollar, and then historically be able to go back and look, how did that functionally get set up? Like, how was the stage set for that to happen? So I really want to thank you on that. I was going to ask you, with these emerging technologies, these digital assets, how much interplay do you see against the backdrop of sovereign currencies as they pertain in world commerce and trade today, and against the backdrop, obviously, of the US dollar?
Yeah. So I think this is for me, this is where it gets really interesting because, on the one hand, I like having just the theoretical, in a perfect world scenario, how would this all develop? And then the other side is, well, how's it actually going to work in the real world where governments exist and legal tender laws exist and governments like to be in control of their own currencies and they don't like competition, So, I was on a panel recently with Jeff Snyder out of Alhambra Partners, and we were talking about how in many ways the dollar's already digital, and the euro dollar specifically, the euro dollar system where dollars exist outside the United States, you could almost argue that was the first digital currency because it's really just entries on a ledger. It's not digital. It's not maybe not done in the same way on a blockchain, and maybe the blockchain is much more efficient at tracking all these ledger entries, but that's essentially what the euro dollar system is just a system of ledger entries, accounting entries. And so as I think in a perfect world, what I would love if there was just competition amongst currencies, and whatever the market chose as the best currency, that would become the global reserve, or that would become the most used currency. But that's not the world we live in. I mean, at the end of the day, one of the biggest tools that governments have, and again, you don't have to like this, but it's important to understand the mindset of governments and the way that they act. Like, governments do not give up power willingly. Power is never given, it's always taken, right? And as governments get bigger and more powerful, they take more control. They don't give up control. And one of the biggest things they have control of is their currencies. So the idea that they are going to just give them up, whether it's to gold or whether it's to some other commodity-based currency or it's to some digital ledger technology, I don't see that happening willingly. I'm not saying that it can't happen, and I'm not saying that digital currencies can't go up tremendously in value, but for them to be adopted by a sovereign state, I think is unlikely, unless it's a digital technology or a digital currency that they themselves release, and that they themselves. So it would be one of these, instead of a decentrally planned, currency, it would be a centrally planned digital currency. And that's not necessarily what I would like to see, but that's what I think that you will see. I don't think that they can, at this point, shut down Bitcoin. I think Bitcoin has gotten too big. But they can do many things that would discourage its use. And this is probably an area where I disagree with a number of proponents of Bitcoin or digital currencies, is that, yeah, maybe they can't shut it down because they'd have to shut down the entire internet to shut it down. But, they throw a few people in jail and they pass a few laws about, interacting between the fiat world and Bitcoin. They can do many things to dissuade people from using the technology. And if you don't think that the people will listen, then just look at the number of people around the world that are wearing masks right now. The government said you need to wear masks, and most people, there's people that push back, and there's people that don't agree with it, and some people think that it's not necessary or that it's a hoax, or it doesn't matter the opinion. The point that I want to make is, if you walk outside, most people are wearing masks. Most people are complying with the law of the land. And nobody's been thrown in jail for not wearing a mask, right? Nobody's been fined $1 million for not wearing a mask. You throw a few people in jail for using some digital coin or producing a currency that competes with the US dollar, I think you're going to see people react to that in a negative way and maybe not use the technology as much. So again, can they shut it down? Probably not. And I think I think it's so powerful, the genie's kind of out of the bottle, and this area is going to continue to grow. But the idea that the government is powerless against it, I think, is completely wrong. Anyway, that was kind of a long rambling answer. I hope.
No,
that
I'm glad that you did, and it actually set me up to possibly be able to provide you with something real and tangible. This just happened today, and that is a news release was put out by the Office of the Comptroller of Currency, Brian Books and those folks over there. And they, so in their news release, they referred to a PDF document, which was a response letter by a national bank. And in their response letter, they clearly outlined, well, I'll just give you the high points. So the high points are national banks and FSAs can now custody digital assets, i.e. cryptocurrencies. They can provide all the services that they would be able to provide for any other assets that they are licensed to custody. I think this is huge news, and because one of the biggest barriers in the merging of the existing capital markets and this new crypto world has been regulatory clarity, right?
Sure.
Crypto businesses not being able to have an actual bank
Yep.
account, well, that's no longer a barrier. How about entities like Fidelity and TD Ameritrade and Schwab and all these other consumer-facing brokerages being able to, through their banking institutions, custody their clients' digital assets? To me, this is a huge step forward. Now, is it the end all be all and there'll be total adoption and saturation in the market tomorrow? No. But it is, to me, it's a step in the right direction that we have a regulatory body, and the OCC regulates the banks. There is no question what their preview is, right? Their purview. So to me, this is good. Had you heard of this yet? I know it just came today.
I know that things are working towards that, and I had not heard that news yet. But I think this is kind of the point that I was, or it relates to one of the points I was making, is that I think that this is a growth area, and I think that digital assets and cryptocurrencies are going to continue. This whole industry is going to continue to grow. And one thing I know after working on Wall Street for 20 years is there's a way to make money. Wall Street will figure out a way to get involved, right? Whether it's the marijuana business, whether it's, cryptocurrency business, when traditional finance and Wall Street sees another area making a ton of money, they're going to figure out a way to get involved there, and they're going to drag the regulators and the government agencies along with them. Now, the one thing I would say is that, increasing traditional, institutional, however you want to define that, involvement in cryptocurrencies, and having the space grow and having the space become a more profitable and a money-making enterprise, that is entirely different than Bitcoin or some digital currency becoming the global reserve currency. Those are two completely different things, right? And so this is, it's not really a debate that I have, but when I talk to, there's some Bitcoin evangelists that insist that this is the next, it's the next gold, it's going to replace fiat. Governments are going to be powerless to stop it. I fundamentally disagree with that, but it doesn't mean that Bitcoin can't become worth $100,000 or $1 million or whatever that number is, right? If the market decides that this is a viable technology that they're going to embrace, it can go up a lot. It's very asymmetric.
Well, and I agree with you. I am not a maximalist of anything, other than maybe I'm a capitalism maximalist.
Yeah,
I too, like you, believe that capitalism, or at least let's not even use the word capitalism. I believe that free markets are the quintessential way to operate in large communities, because they have all the mechanisms in a place for equilibrium, right? They're always seeking equilibrium. And it's just a force of what a free market does. Now, with that being said, let's kind of switch gears a little bit here with you. You're the perfect guy to talk to about this. I was educated in the 80s. So started high school in 1980, got out of high school in 84, went to college, had my economics classes, had my business administration classes. All these things happened before 1990. All right. So I never had a computer doing school or any access to all this everything was done in the library and study groups that had the pretty girls, all that kind of stuff. I had my motivations correct. I'm in a world now where everything I learned back then none of it makes sense to me anymore. Nothing I learned in economics is applied. Matter of fact, today's world is completely foreign to the world that I was educated in and what was given to me in university back then. Some things still apply, obviously supply and demand metrics, and there are some things that'll never, Triffin's, dilemma and network effects, and these things are still real and principles that apply. However, maybe as it pertains to monetary policy and how governments operate within money, with money, none of this stuff makes any friggin' sense to me, man. So I look to you to get answers, because I don't think, it doesn't seem like anybody that's running or pulling the levers seems to have the answers, because everything these sovereign nations do with their currencies just seem to create more problems. It's like debt is not the answer to everything, yet it seems to be the first thing they go to. Let's create debt. Let's issue another bond. Let's do this. Help me understand the rationale or is it unrational?
Well, I know exactly what you're talking about, because when I was in school, I would take these finance, and I'll be honest, like a lot of the finance classes, I mean, I was smart enough to memorize what they told me and what I needed to say to pass a test and, calculate certain mathematical ratios or whatever it was. But a lot of it didn't really make sense to me. But at the time, I don't know what the right way to say this is, but I don't want to say I wasn't a critical thinker, but I was probably naive is probably the right way to say it. I probably thought that, our monetary authorities and our governors and all that kind of stuff had altruistic intentions and, were there to help us. And, as I got older and things started happening that just didn't, kind of pulled back the layers of the onion, and I kind of started to see things for what they really were, I realized that wasn't necessarily the case. And when I was younger, I was probably just studying this stuff to get the necessary credentials to then go get the job that I wanted, right? And while I found it interesting, the main goal was to get a job that I wanted. It wasn't necessarily studying for studying's sake. But after I'd been in business for about 10 years and stuff just still wasn't making sense, and I would go to ask my superiors who, I thought were, these geniuses. Well, at the time, I thought they were geniuses, and they couldn't answer my simple questions. And not only could they not answer the simple questions, they, to a certain extent, made fun of me for even asking them. That's when I went back and started studying this stuff on my own. And it was really, a period of self-discovery and rereading these textbooks and, digging into, blog posts and reading other schools of thought than I was originally taught, that you start to see the way it really works. And part of there's a famous scene in the movie The Big Short, or in the, where they have this Hollywood actress who's explaining some of the terminology that Wall Street uses, and that they use this purposefully obscure and confusing terminology in order to make it hard to understand. If they would just talk normally like a normal person, you could see through the bullshit. Right? But they don't want you to see through the bullshit, so they make it purposefully, opaque. And once you kind of figure that out and you start realizing the way the system is designed, the bottom line is that the system has a flawed design. And when you have central banks that loan money into existence, it is a naturally inflationary system that will either grow or it will crash. So it's both naturally inflationary and both naturally deflationary, because one of the two is guaranteed to happen. It's a mathematical certainty. It's a mathematical certainty that you will either have runaway inflation or a deflationary collapse. There's no, now it could take 100 years for it to happen, but it is mathematically certain to happen. And that's the type of system we have. And so as money gets loaned into existence, there will never be enough money to pay off the debt. It's just the design of the system will not let that happen. And once you try to start doing that, it actually collapses the system. And, a politician is never going to purposefully collapse the system. And the central banks, they are there to step in when the collapse does start to happen. That's why they're there. That's their primary role, right? So to think, so when I have kind of this, this thing when people criticize the Fed, I completely get and understand criticizing the Fed. I criticize the Fed as well. But to think that they're not going to act is completely ridiculous, because they were created to react. That's why they're there. So to think that Jay Powell isn't going to print or isn't going to bail somebody out, and to complain about it when he does, it's a little bit to miss the mark. It's okay to complain about it, but to think that he really isn't going to, well, you're just not being realistic, because he has to. That's his job. And so, to your point, a lot of the stuff doesn't make sense. This is not going to end well. It just isn't. I don't know exactly how it's going to end. I don't know when it's going to end, but I know that it's an inherently unstable system. And kind of in my opinion, one of the most evil parts of it is that I think a lot of the people who think they have it all figured out because they understand everything that I've just said may ultimately get hurt, because not only is the system rigged against the individual, the dollar system is rigged against every other currency as well. And this is the point that I've been trying to point out to people with my dollar milkshake theory. I do not like the dollar. It is a horrible currency that it is going to lose its value versus real things. It's going to get inflated away, and there's going to be a lot of people who suffer as a result of it. But the path that takes us to get there, in my opinion, crushes all the other fiat currencies before that happens.
Right.
And so the people, I have my argument on the dollar milkshake theory has never been against gold. I have a lot of people who will come up and say, yeah, but versus gold, it's going to do this. I agree with you. Part of the milkshake theory says gold's going to go to $5,000 and higher. But the real world, as much as I might want it to, or other people might want it, does not operate on a gold standard. It operates on a dollar standard. And it is rigged. The system is rigged in favor of the dollar. Now, you don't have to like it, but I think it's important to understand that. And I think we're moving into the quote unquote end game of this whole fiat monetary design. Now, I don't know if the end game is going to take 1 year or 10 years to ultimately play out, but I think we're entering the end game, and I think it's about to get. If you think the last 12 years have been a little bit crazy, I think the next 12 are going to be even more crazy.
Right.
Anyway, well, again, another very long ramble, but I hope.
No, I love it. I love it. I'll tell you. So your thesis, although I had not heard it, is in line with a major life choice that I made several years ago. I moved down here to Costa Rica, and I live in Costa Rica for primarily one reason: it's paradise. But secondarily, right beyond the paradise element, it's the fact that my life and my finances are in the U.S. dollar, and the U.S. dollar has a strength down here in Latin America like none other, right? It doesn't matter what country you go to down here, the U.S. dollar is king and continues to get stronger. So for instance, my exchange rate when I got down here was 514 colones per U.S. dollar. 2 years later, we're sitting at, we vacillate in between 590 and 610. So instead of the inflationary effects that I would be subject to in the United States, right, my purchasing power gains down here.
Has gone up. That's right.
And this to me is something that's very attractive, but it's also scary, and scary for the points that you brought up, and that is the whole world is going to get crushed under the weight of the demise of United States monetary policy.
I agree with you. I agree with you.
So where do you go and what do you do? Well, you move to Costa Rica. You get yourself some digital assets, and you continue to engage with incredibly bright, forward-thinking people like yourself, because I believe through the collective hive effect, answers will come. I don't have the single magic bullet answer. I know that you don't. I know that Raul doesn't. However, enough of these people get their mind power together, and maybe we'll come up with this. So I'm going to ask you a question.
Real before you ask the question, let me make a point before I forget about it, because I think that, and you might be able to help me make this point. There's this concept called the common knowledge game.
Mhm.
And it's basically you're betting on what everybody else. You're not betting on what you think is going to happen. You're betting on what you think everybody else thinks is going to happen. So my question to you is, in times of global turmoil or uncertainty, what's the first thing that people in Costa Rica buy as far as currencies?
They don't. They buy jewelry.
Okay, they buy jewelry. Do they buy gold, or do they buy foreign dollars, or do they buy reals, or what do they?
Gold, jewelry.
So they
See,
buy
we don't
gold.
have the same FI. We
Oh,
don't have the same
because you guys,
infrastructure.
yeah. Well, I guess my point is in Latin America, one of the first things, if you talk to people in Brazil or Argentina or Chile or Bolivia, the first thing they buy is dollars.
Right.
Mexico, they buy dollars. Now, if they have something extra, they will buy gold. But as far as a fiat currency goes, they all go to dollars. So it doesn't
You're
matter.
saying it had to be fiat? Yeah, of course it would
Yeah,
be
yeah.
dollars.
And I
Yeah,
guess that's my point is this, it doesn't, I'm not saying to not buy gold. You should absolutely buy gold, but it's important to understand what everybody else is going to do, because that is going to move price. What everybody else does moves price, right?
correct.
And so if the rest of the world, even if they hate it, if the rest of the world's knee-jerk reaction in a global economic crisis is to buy dollars, then dollars are going to go up versus other fiat currencies. Now, gold might go up more, but the dollar, for many reasons, is an institutionalized safe haven. And so, that's where I think people need to think about where they have their assets. If you are building up a I don't know, a side account or a safety net or a safe haven portfolio, it's important to understand what currencies you have in there. Anyway, I'll leave it at that. And sorry to
Well,
interrupt. I just wanted to make that point.
it's interesting that you bring that up. I found Costa Rica through medical tourism, right? I came down to
Okay,
get some
yeah,
dental work
sure.
done,
Yeah.
fell in love with the place, came back down, got eye surgery done, came back down, finished my dental work. Interesting point. The medical establishments that are not in the quote unquote national medical system, these are private practitioners. These are the folks that do the surgeries and what have you. They want to deal in dollars. So for instance, if you're a Canadian or an American or a European and you're coming to Costa Rica for medical tourism, they're asking you to bring your euro or your dollar
Interesting.
to pay for your services, right?
Yep.
Well, for me, that total, when it's all said and done, I probably got 14,000 US dollars into like my eye surgery and my dental work and all that kind of stuff. That meant I had to have that cash in my pocket.
Right.
Well, one of the elements of the cryptocurrency technology is I saw a use case here where that same value of that US dollar could easily be transferred digitally. All I need is my thumb drive, as opposed to a quote unquote suitcase. Oh, and by the way, they ask you to declare how much cash you're bringing into the country.
Right.
So you kind of generally have to lie. You have to lie, or you're going to get pulled off to the side and treated like Pablo Escobar. Now, there are other subcultures in these Latin American countries that deal in the dollar, right? Now, I don't do drugs and not into drugs, but there's a whole drug industry fueled by the US dollar.
Oh, sure.
There's an
absolutely.
entire industry of, we'll call it working girls that deal in the US dollar. I mean, there's a bunch of these subcultures that all throughout permeate Latin America, whether it be Central America or South America, all they want US dollars. And it makes sense because the national currencies continue to devalue relative to the dollar steadily over time. I mean, you can almost set your clock to it.
Yep.
So the question is, when does the whole thing blow up, or do they get smart? Because I've thought about what are the answers, and I'll tell you the only answer that I come up with that's logical and I believe is practical is in two columns. There's individual and there's national. National represents governmental, and it doesn't matter if it's Canada, US, Russia, it doesn't matter. Debt jubilees, debt forgiveness programs or protocols or initiatives, whatever you want to call it, but debt forgiveness. That seems to be the only thing that rationally makes sense. Is there, I'm sure you could easily dispel that, but am I on,
Well,
what do you think?
I think you're on the right track. I don't think it's quite as easy as saying it, though, and let me tell you why.
My kid, hey, Brett, before you begin,
yeah,
my kid seems to think it works great.
yeah.
You know,
Well,
he's real
you
good.
know what?
Hey, Dad, can we just forget that 100 I borrowed from you?
Good point. Good point. Well, so here's the thing: is in a debt-based society or in a debt-based monetary system, you need collateral. Basically, what you do is you have assets or collateral, you
Right,
have assets that act as collateral to loan new money into existence, right? And in our system, sovereign bonds are AAA rated collateral,
correct.
and it is what backs the monetary systems in each country. Because a bank can buy it and hold it on its balance sheet and then loan against it. Or, a high net worth investor can have they have a $10 million portfolio and it's full of government bonds. They can borrow against that. That creates new money. They take that money and they go buy a boat. The guy that, got the money for selling the boats and goes and puts it in his account. And then he borrows against it to go, I don't know, build a new marina, whatever it is, right? And so that's how money gets created in the system. So the problem is if you start removing collateral, which is debt, you also have the potential to shrink the amount of potential of the total monetary base. Now, I think it's possible that you could forgive the debt that sits on the central bank balance sheet. In other words, so if the Bank of Japan has bought all these Japanese government bonds and they're just sitting on the Bank of Japan's balance sheet, the Bank of Japan could potentially forgive the loan to the government. I don't think they could just wipe out that whole, but let's say, as an example, let's pretend, let's just use the Fed as an example. The Treasury issues $100 billion worth of treasuries, and it ends up that 90 billion of them are on the Fed balance sheet and 10 billion are in my account and your account and other people's accounts. I don't think you could just forgive the whole 100 billion, because then you're taking away your asset and my asset and whoever else. But maybe there's a way that you could just forgive the 90 billion that's on the Fed's balance sheet, because that makes the Fed, it frees up their balance sheet to go buy more, so to speak. But you can't just wipe out all the debt, because then again, you're wiping out somebody else's asset, and it leads to a contraction of the monetary supply rather than an expansion. So in concept, I think it's possible, and I think that it will probably be tried at some point in the next 5 years, call it, maybe the next 5 months, I don't know. But I don't think it's quite as simple as just saying debt jubilee.
No, I get that. And
Yep.
nothing in this world can be boiled down and simplified to a bullet point.
Right.
I totally get that, but it was the concept that was the only thing that made sense for me. And the same principle that would apply to the individual having collateral taken away or an asset stripped from him, which would be completely wrong and immoral. The same would be said if it was, let's say we're talking about two central banks, let's say the Fed and the Central Bank of Japan, which we share each other's debt. Right? One more than the other, obviously. So at some point there's an equilibrium. And maybe it's an equilibrium type of thing. So if we're holding 10 billion of Japanese government bonds and they're holding 30 billion of US bonds, well, maybe we can wipe it zero, and now they're only holding 20 billion American bonds, and we've wiped the debt service for 10 billion off the books. That type of thing. I can tell you this to me.
I can tell you this: if some central bank does it and it doesn't crash their economy, then everybody else is going to start doing it, right? Because no government is going to let somebody else, another country, get away with it and not them do it. And Trump, you think Trump wouldn't love to just write off the debt? Of course he would. Or Biden, for that. It doesn't matter who the president is. It doesn't matter who the politicians are. They all want to spend more money, right? Politicians don't get elected by saying no. They get elected by saying, I'm going to give you this and I'm going to give you this and it's going to be great and da-da-da-da. Well, they can't do that if they are going to use all the money that would go to those programs to pay off the debt. So if they could somehow free up capital to, do these new projects, they would happily do it.
Well, you would
And
think
the other thing is, by stripping somebody's asset, by doing debt forgiveness, you're kind of outright and very openly stripping somebody else's asset. Whereas if you can figure out a way to do it through inflation, most people can't even figure that out, right? So one is kind of covert and one's kind of overt. And so I think they would much prefer to do it in a way that they overtly or covertly, took your purchasing power, rather than just, outright, brazen theft.
no, I totally get that.
Yeah.
I mean, obviously something has to happen. Correct me if I'm wrong. I'm not a practitioner in this space.
Yep.
What I know about this could fit in a thimble next to your, big gulp size cup of knowledge. However, with that being said, question, it appears to me that it's inevitable the system is going to break. Now,
absolutely.
The next question is, what replaces it? Because what we've, I don't think we can do the 80s and 90s again. That whole Reagan, Thatcher, credit is good, consume. It's a different world now. We're a little smarter now as a general population. And we can look at recent history. We have that recency bias of seeing it doesn't work. Look at what debt as the main player of your GDP looks like. This is the result.
Yeah.
You get to a place where you can't service it any longer. And all the mechanisms that used to create real yield are gone. They're no longer a cog in that machine. You know what I mean? I mean, there's yield places, but you know what I mean. That AAA rated debt instrument you talked about, the bonds.
Yeah.
There's nothing there.
No.
There's nothing there. You cannot create yield to pay debt off those things. You have to keep making them. Well, I can't issue a JerryVHall bond yet. And Brent Johnson doesn't have a bond I can go get.
You know what? You might be able to do it on the blockchain here pretty soon. But yeah, right. No, but I hear the point you're making, and this. I don't want to keep coming back to this and harping on it, but this kind of goes back to my theory a little bit too. Is there is no other system right now. So what comes next, right? And if there was another system that existed that countries could leave the dollar for and immediately move to, and that would work for global trade and global savings and global payments, they would have already left. There is not another system. Now I know there's people out there are going to say go to gold. Okay, fine, yes, gold will rise in value, but there is not a gold payment system that the entire world can use. There is not a global way to pay all global invoices and cross-border trade in gold. And so it would, even if everybody agreed, even if all the governments of the world said, you know what, screw the US, we're no longer dealing with them, we're not using the dollar anymore, we're willing to fight the US Navy even if they try to enforce it, and we're going to go to gold, they've still got to build the system via which gold settles all the accounts. It doesn't, you don't just snap your fingers and it appears. It has to be agreed to, it has to be designed, it has to be implemented, and it has to be doing it while the Navy's shooting, missiles over your head, right? It just, so I'm very sympathetic to the idea, and something is going to have to be developed. In my opinion, what's going to happen, and this is just my opinion, and I say all the time, I can be wrong on this. I'm not betting everything I have on this, but I have a high degree of certainty that the way this is all going to play out is it's going to be a meltdown of fiat currencies, and the dollar will be the strongest of the fiats. And so if you line up 10 currencies and one of them is the dollar and the other 9 are all the other players, even if you don't think it's going to be one of those fiat currencies, even if they all fall versus gold, one of those fiat currencies is going to outperform the other 9, right? And I think for many reasons, the one that's going to outperform the other 9 is the dollar. And I don't think, even though I think other countries are probably tired of the dollar and tired of, the US being a bully and tired of, having to succumb to U.S. sanctions in order to, abide by what the U.S. wants you to do in order to avoid sanctions. I don't think those governments want to give up control either. So I don't think those governments want to go to a gold standard. I think if they wanted to go to a gold standard, they already would have gone to a gold standard. So I think they all want a fiat system, but until they all agree on what that new fiat system is, there's only one that exists, and that's the dollar payment system. So I think that this has to come about through creative destruction. I think the only way a new system is going to come into be is when the old system just melts down. And I think it melts down through the dollar going up. And then they will be forced to come up with a new system. I don't think that they will come to one willingly.
Right.
So I don't know what comes next. I just know that we have the stage set for a currency crisis of epic proportions. Yeah. And I have less faith in the Fed's ability to manage this than a lot of the people who think that the dollar is just going to continue to fall and there's not going to be any problems. I think there's going to be a lot of problems, and I don't think the Fed is going to be able to control it.
I could not agree more. I could not agree more with you on that. And that's one of the reasons I enjoy the strength of the US dollar. But I'm also positioned in other places that, and I see things like, obviously being in my space every day is probably 80% speculation. You know what I mean?
Yeah.
I mean, you read things and you connect dots and you assign probabilities. I'm looking at it through this macro lens, but I can see the progression marching forward. You've got China creating their digital currency, the digital yuan, them muscling their trade partners. I don't hear a lot of people talk about this. Trade is a monster influencer of policy. And although if you take the United States off the quote unquote risk board, right, take it off the world map and it's just all the other countries, China is a monster trade partner all over the world. I mean, like down here in Costa Rica, they finance both of our West Coast and East Coast ports, right? The Caribbean port that we have and our port here on the west side. They're a huge trade partner. They come in and say, okay, Costa Rica, we're no longer going to deal with this whole US dollar thing. We're going to use the digital yuan, and we want to do all of our agricultural food payments using this digital yuan. You think Costa Rica is going to go, sorry, can't help you, we won't do it? No, of course they're going to do it. I mean, they're the second, they're a monster player in the economies of so many countries around the world. There's an element of this that I see getting some traction. How much traction, I don't know. But it's there. It's real. We cannot be blind to it, I think, is the point that I'm trying to make.
And I think this is probably where I start to diverge with people to a certain extent, but I'm not blind to it. You're absolutely right. De-dollarization is absolutely taking place. There's no question that de-dollarization is taking place. There's no question that there's the desire there for de-dollarization. There's no question that big players like Russia and China can muscle smaller countries like Costa Rica or El Salvador or Mauritius, into some certain deals. But the thing that I would say is that when Europe as a whole stops using the dollar, or when Brazil as a whole stops using the dollar, or when Deutsche Bank and HSBC and Morgan Stanley stop using the dollar, then, and when the CEOs of those companies say, you know what, we are no longer going to use the SWIFT system. We're going to use this other system that somebody else designed. Then that's the earthquake. Right now, these are just like little tremors, and I'm not dismissing them. You should pay attention to them. You should watch them, and you should understand what is happening. But the idea that this could all be switched over to the Chinese digital yuan overnight, I don't think is.
I agree. Reality. Overnight, no way. But and there's the anchor. See, this is my view. My view, that for years and years and years, it was post World War II and the U.S. petrodollar, right? The oil dollar. that were the primary driver. So in World War II, we got all the countries gold. They wanted to buy stuff from us until we got into the war, which made us very wealthy. And then having the number one resource on the planet that is used by everybody on the planet being traded in our currency. And the fact that at that time our currency still was pegged to gold in some percentage, and other countries saying, well, all we need to do is peg our currency to the dollar's pegged to gold, we don't need to be pegged to gold anymore. Okay, great, until Nixon completely took us off of it. And this whole ramp up of the euro dollar that you talked about. So I see the two pillars holding the US dollar with an absolute death grip on the world being the US dollar as it pertains to trading oil, and then debt denominated in the US dollar outside of the US. Those are the, to me, those are the two biggies. And until they go away, the US dollar is king. Am I correct on that?
Yes, absolutely. I agree with you 100%.
Okay. Yeah, so I agree. None of these incredible new technologies or this dislocator or this disruptor is going to shake the world down to its foundation. No. Yeah. However, it does show a trend. And as a guy that looks at macro, through a macro lens, trends that are gaining momentum are ones to follow. Now, for me, I've taken an investment position in this trend. I hope it pays off. My bet could be wrong, and I could die living on Social Security. I don't know. But I think it's a pretty good guess. I think it's a pretty good bet, and I think I'll be okay. Can I ask you a question?
Sure.
Do you have any personal holdings in crypto?
I do, not a lot, but I know I do have some. I own some Bitcoin. I don't own a lot of it, but I own some of it. And I honestly, I don't even think about it that much. I do own some, but I don't even think about it that much. I follow the price and stuff, but I don't go and look at the balance, and I don't. I should probably own more than I do, based on my beliefs in it. I should probably own more than I do. Again, I think that ultimately, Bitcoin's going to go a lot higher, but I think it's going to be a much rockier road than some of the people I talk to. It doesn't mean that it's going to zero. Maybe it goes to 5,000 and stays there for a year, and then it goes to 50,000, and then it pulls back to 20 and goes to 100. I think the stair step is higher, but I think there will be some, I guess, dark days along the way. And and to a certain extent, I consider Bitcoin a speculation. I think it's a very good speculation, but I think it's a speculation. And I have a lot of my speculative cash in my fund right now because, I kind of feel like I need to eat my own cooking, so to speak.
No, absolutely. I'm not a big Bitcoin holder. I have a little Bitcoin. My primary holdings are in three verticals: payments. So I believe of the cryptocurrency world, there is one currency. It's called XRP, and it's backed by a company named Ripple, and they are best in class as it pertains to a business that has partners, that has contracts, that is working with regulators to integrate into the existing financial legacy system. So that's why I put my chips on them as the payment token, coin, crypto, whatever you want to call it, because of those things. And programmable money, I think smart contracts are going to be monstrous for executing functionality throughout many different processes, whether it be real estate, trade, debt creation, finance management, right? I think that's huge. So I placed my bets in that vertical on a protocol called Cardano. For many different reasons. The founders, bright, excellent team. The way they've gone about building is not about getting money quick on their coin. It's about building an actual protocol that can stand the test of time and move forward. I also believe DeFi is going to be a big part. Decentralized finance or distributed ledger finance will be a big part going forward. So Cardano's my bet on that. And then there's this company called Vechain, which is doing incredible work in supply chain management, authentication, from seed to table as it pertains to agricultural products, or manufactured goods like Rolex watches and
Hmm.
your special limited edition Nike Air whatevers.
Yeah, right.
You know, but
My
supply
son would
chain
like that.
management
My
stuff.
son loves sneakers, so he would love that.
Yeah, and they're also in medicine. You know, medications from the lab to the user. Supply chain management in the logistics and the financing and the smart contract codes that can come and do validation and payment for steps along the way. I think that's a growth industry. So I placed my bet on those 3 protocols based off about a year and a half of research, and I continue to research every day. But I think I've made good bets, good solid bets of what I believe they'll still be there at the end. Unlike remember the .com boom? You were a young man back then.
No,
But
I was just starting my career. Yeah.
okay, so you saw that all you needed to do was put .com at the end of your name, and you could get seed investment, right?
Totally.
Well, this space is very much like that. However, I think I've done a good enough job in my research and I understand the macro view of what's happening and where it's going to go, that the three I chose, I think will be there. They'll be the Google, they'll be the Amazon, they'll be the, going forward.
Yeah.
We'll see.
Yeah,
I mean, that's wrong.
It's fascinating. Well, the thing is like, it's, you're in on the ground floor, right? Does it work? I don't know, but if you're in a growth industry and you've done your research, you got to put some money on the line. Otherwise, you're just wasting your time, right? That's kind of how it's like sometimes you go on Twitter and people are making all those comments and then you find out they don't even have an investment in it. And it's just like, well, why, it's just talk. Unless you actually put your money on the line, how much do you really believe in it? So, I think it sounds like, it's an area that you're passionate about, a lot about, you enjoy researching it. And if you think it's got a chance, then I think, for me, it's all about portfolio construction.
Right.
I'm somebody who manages entire portfolios for clients. So I'm never going to put them 100% into gold or 100% into Bitcoin or 100% into the dollar. I create portfolios, and part of the portfolio is very conservative. Part of it's, a little bit more aggressive, and we'll take small amounts of the portfolio and we'll do some asymmetric speculative bets. And if we lose those, well, that's fine, because that's what it's designed to do. But if you do 10 speculative bets and 4 or 5 of them fail and 2 of them, 3 of them do okay, and 1 of them does great, it's almost like a little venture capital portfolio. And, that's, you're not going to hit 100%. You're not going to bat, you're not going to hit a home run every time you get up to bat. You're just not. But if you can kind of control your losses on some of the speculations and make some outsized gains on some of your other speculations, that's the way to create some really nice returns and some wealth over time.
Excellent. So, one of the things I wanted to leave towards the end, and here we are at the end, unfortunately, was this. I have a hypothetical for you. Okay.
Yep.
Hypothetical is that the bulk of my capital that I invested in crypto pays off tremendously, right? Now, because I am such an admirer of your work, the way you communicate, I've got a sense of how you think and who you are as a person. Do I have the ability as a non-corporate or family office to call Brent and say, okay, Brent, listen, I'm thinking about, I'm gonna capitalize a pool of money that I want you and Santiago Capital to handle for me. Can I get in with $1.5 million, or do I need to have 10 million, 25 billion? I mean, what's the story? So folks because a lot of us are going to be very rich, and we're going to need people like you to help us create these portfolios for the future.
Well, whether you're a little bit rich or a lot rich, I still want the phone call. And then
oh, good.
But the bottom line is, I'll just tell you how I manage my business right now, and then I'll let you take it from there. But right now, I have a traditional wealth management business. I've got about 15 clients. I manage about 135 million in separately managed accounts for them. Okay. And so we customize everybody's account to them specifically. I've got one guy that all he wants to do is make 4 or 5% on his money, and he wants to go fly his airplanes all the time. He doesn't want a lot of risk. Totally fine. We've got somebody else who's a little bit younger, wants to take a little bit more risk, and so his portfolio is more aggressive than the other guy. But by not having a couple hundred clients, I can actually customize portfolios to individuals and really kind of help them figure out what makes sense for them. And so those, the account size on those, the minimums where we start is $3 million. Now, if somebody's got 2.7, I still talk to them, and I've got a couple accounts that are, 2.8, 2.9, et cetera, et cetera. But then we've got several that are 8 million, 10 million, 30 million. So, again, it's not somebody who's got $80,000 to invest. I wish I could help everybody. I just can't. But then in addition to the separately managed account business, we have a fund, which is a private fund. It's a special purpose vehicle. You can call it a hedge fund if you want. It's basically a limited partnership, master feeder structure where we have both onshore clients and offshore clients. And that is a fund where people contribute, and we literally try to play the thesis of the dollar milkshake theory, where we try to take advantage of the chaos that we see coming as a result of the dollar getting stronger. To participate in that fund, for regulatory reasons, you have to have a minimum net worth of $2 million, but you don't have to.
Investor.
You have to be an accredited investor. You don't have to invest that much, but you have to qualify. And then after that, the minimum account size is 250,000. So, I'm happy to talk to anybody that has questions. I always, I get a lot of emails and a lot of phone calls, and I get a lot of direct messages on Twitter, and I don't always get back to everybody. I try, but sometimes I just get too many to respond, but I'm always happy to receive them. If you ask me a question and I don't get back, feel free to send me another email or ask me again. I'm more than happy to talk to everybody and help whoever I can.
Right on. I want to close you out with two questions. One has a very, very short answer, and the other, please feel free to expand upon as you'd like. The first one with a short answer is, through your media exposure, which you've had a lot, has anybody approached you seeking for you to mentor them? Have you had a young college kid or somebody reach out and say, hey, Brent, the way you do what you do really resonates with me. I'd like to study at your feet?
I have had a few. Unfortunately, I don't have the time to actually have internships because as much as I'd love to give internships actually end up being a lot of work for the mentor as well.
Yes, they do.
And I've got a pretty full plate right now with my family and then managing my businesses, but I'm more than happy to answer questions over the phone. I've had several phone conversations with people like that. I'll tell you a good story. And it's actually, I don't know if he'll hear this or not, and I'm not going to say who it is, but there was a guy probably 3 years ago that reached out to me, and super nice guy. And he was very persistent. And every time he sent me something, he had like something intelligent to say. He wasn't just asking me 20 questions without providing any value. He would send me an interesting article that he'd read. And anyway, he asked me if he could come in and meet me, and he came in and met me. And he's a really smart guy, but he didn't have a traditional education in finance, and his career path was completely on a different track than finance. But he really wanted to get into finance, and he'd showed me all these reports that he'd written up, and I said, you should start a website where you post these reports, and it doesn't matter if anybody reads them or not. 2-3 years from now, if you are trying to get into this business, you can point your potential employee to this website that you've kept. They can see your body of work. And, he went out and he did it. He took my advice and he did it. And then he started a newsletter, and it's a good newsletter. I mean, now he's got a business. He's got a finance business, and I'm super proud of him. And, he didn't do that just because of me. But I think that was an area where maybe I encouraged him a little bit to kind of follow his passion, and it worked out. So anyway, I love helping people. Part of the reason I'm so active on podcasts and Twitter and social media is that listen, I don't have to do this. I do it because I want to, and I do it because I actually want to help people, right? And whether you're my client or not my client, I hope by people listening to me, and even if they don't agree with me, if they just think about what I say and it makes them kind of hone in on their own thesis a little bit more, and maybe do a little bit more due diligence on their ideas, then maybe I've provided some value to them in some form or another. And ultimately, we all get things right. We all get things wrong. You don't survive in this business if you get more things wrong than you get right. And I've been doing it for 20 years. And a lot of my clients have been with me for that full 20 years. And they wouldn't, I wouldn't have a 20-year client if I didn't know what I was doing at least a little bit of the time. So I hope that some of my ideas help people. If they do, that's great. If they don't, well, got to find somebody else to listen to.
Cool. Well, the one I was hoping to get a long answer from.
Oh, sorry,
this.
that was supposed to be my short answer.
That was your short answer.
I thought
And
that was
that's
my
okay,
long
that's
answer.
okay. We're not on a clock here. I want to close out with this, and because I really find this fascinating. I've really enjoyed the content and information that you've provided, but also I want to let you know there's an element of an interpersonal relationship. Even though you and I have never met before, I have a sense of who you are because there's a context in which you carry yourself throughout life, and it shows in the way you communicate, right? But I've never heard anybody ask you this before, so I want to be the guy, and that is this.
Okay.
What would be the 3 qualities you want to be remembered for after you've passed?
Wow, that's a good question. So I think I would want people to say I was honest. I would want people to say I was tough. And I would want people to say I was open-minded. I think I'll leave it at that. So there's my short answer.
Your short answer was eloquent. It was succinct. And I can see all of those qualities come through the way that you communicate. And I'm sure the people who are close to you, your family and close cohorts at work, could testify that those qualities are probably true and present in your behavior on a daily basis. And for that, I want to thank you.
Oh, well, I appreciate you inviting me. Happy to come back anytime.
Right on.
For me, it's all about the conversation. You live and learn. You get things right, you get things wrong, but you just keep pushing forward.
Right on. Well, you're in the city, which means it'd be 6 o'clock. So I do a live stream on Friday nights, only on one night a week. I do a live stream. It's very interactive. I got a lot of people that come in and ask questions. The audience is crypto minded, but trying to understand and look at things through a macro lens. And so there's always really cool questions. If you're ever open to do an hour live stream on a Friday at 6 p.m. your time, I would.
Yeah, let's do it. Let's try to do it. Let's try to do it sometime in the next couple of months.
Okay, we'll do. So, folks, this was an incredible conversation with Mr. Brent Johnson from Santiago Capital. I hope you enjoyed it. From San Francisco for Brent and from Costa Rica for Jerry. Until next time, everybody. Pura vida.
Bye, guys.